So welcome everybody. I don't know if this is probably gonna be the last video. Should it be the last video? Nah, I think it shouldn't be the last video. It should probably be the second video in the series of episodes for this so-called course or whatever it is, right? So this video, I was planning to do a video about top-down analysis, but I decided, you know what? It's best to put top-down analysis and market structure and bias into one video. Basically, how to find a bias or how to read market structure or whatever it is, right? You said, no, let's make it one video at once because top-down analysis is basically the gist of bias. It's the whole idea of bias as a whole, basically. For those who don't know what top-down analysis is starting from a higher time frame to find direction, right? To predict or to forecast where the market is most likely headed, and then stepping down to the lower time frames to find a much lower risk entry, right? To find lower risk trades based off high time frame direction and bias, excuse me. So I'm so burnt, guys. I'm still really heartbroken about missing this trade, bro. I really missed this trade because of a blackout. There was a blackout this side, man. Load shedding was doing, Escom was doing its thing, bro. An unplanned blackout. Electricity just went off at 9 a.m. and this thing really came back at like 1 a.m. the next day. So yeah, but it is what it is, man. It's part of psychology. So we move on. We want to see if there's still more opportunities. Maybe there might be another opportunity on Nasdaq, but it's just that December can be a little slow. It can be very slow because most investors are not in the market or they're not pulling money into the market. People are on holidays, so there's a lot happening in December, especially moving closer and closer towards the Christmas holidays, or is it the festive holidays? Yeah. So anyway, when it comes to bias, when it comes to trading as a whole, right? Before you take a trade, when it comes to trading, in order to increase your probabilities, you need to be able to properly find a bias or to properly find a direction in which you can have a higher possibility of making profit, right? Because trading is all about probabilities. It's a 50-50 chance that you'll win or lose, but you increase your chances by trying to figure out a bias or a direction in the market from a higher time frame before stepping down to the lower time frames, looking for entries, looking for setups and patterns, or whatever entry strategy you may be using, basically, right? So for example, let me make an example, right? If you look at Nasdaq from the monthly time frame, right? If you look at Nasdaq from the monthly time frame, let's do this. If you check this Nasdaq from the monthly time frame based on the behavior of Nasdaq for the past 1, 2, 3, 4, for the past 4 months, right? Look at the candles for the past 4 months. If you look at these candles, right? If you compare the combination of the candle from August, September, and October, right? If you compare these three candles, these 3 months worth of price action, these three candles to the length or the strength or whatever you want to use. If you watch the advanced candlesticks analysis video, you will understand the terms that I'm trying to use. Actually, this video must come after the advanced candlesticks. Actually, no, watch the advanced candlesticks video, guys, then you'll understand what I'm saying. I go into greater detail. If you look at this candle, right? This candle from November, is it November, right? The November candle, right? It completely engulfs the bodies of these 3 previous months, right? It engulfs them, meaning it can cover all 3 months. It basically in November, Nasdaq priced 3 months worth price action in just a single month, basically. What that is actually telling you, and we are in an overall uptrend, right? This is market structure, right? Right now we're in an overall market, but let's forget that this is the monthly time frame, right? Okay, let's do this. The market was firstly going downwards. It retraced. It created a lower high. This is a high, a lower high. These are the basics of market structure, guys. You should know these basics. A high, a lower high right here. It continued to drop. It came back and created another lower high right there. Let's do this. This is gonna slow down things, but it's better if we do this once. Let's say lower high LH visibility. weeks and days. Let it show on the weekly time frame as well. Let's say also the daily. That's the lower high right there. It created a lower high there. Just duplicate, clone, I mean. There's a lower high right there. It's not clear enough. Let's open it wider. I hope you guys can see properly, right? Lower high. There's another one here. Clone. There's another lower high down there. And that right there is a high. That's a high, right? That's the first high. It drops, comes back. Basically, it's doing this. Which line should we use? There's no ray. No, let's use a trend line. Basically, it went like this. Stopped there. Right, and then it came back up slightly. Dropped again. Came back up. Dropped again like this. This is basically what the market was doing. This is the structure of a downward trend. This is a basic market structure. These are market structure basics. You guys should already know this thing like the back of your head. I even don't even pay attention to this anymore unless it's the lower time frames, like the 5 minute, the 1 hour and stuff. I rarely pay attention to this, but okay, maybe let's say I pay attention to it with instinct. It's now part of me. It's instinct. I rarely notice it. I only see myself trading because of it. For example, I wouldn't have noticed this structure, but I would have taken the trade after this break right here. I think I'm going too fast. Let me slow down. Right, let me slow down. I'm going a little too fast. Right, let's finish off this thing right here. It goes like this, and then going a little too fast now. Let's do this. Right, we can all agree this is the structure of a downward trend. There's a high, a lower high, lower low, lower high, lower low, lower high, lower low, right? Then we have a lower low right there. That's basically the structure you guys are seeing right here. You can see it a lot clearly if you go to the weekly time frame. You'll see it a lot clearly on the weekly time frame, but you'll see when we get there. So over here, for months, there was a sell-off. It's probably after COVID. It's probably during the COVID times, 2021 until probably early 2023. That's when the trend switched right here. The trend switched right here in March 2023. How did the trend change, right? We were creating lower highs, right? Then what happened in March 2023? What did this candle do, right? At first, this candle was telling us that these levels are strong, these previous highs are strong, or these previous lower highs are very strong, because it was rejecting and failing to break that level. But when March came along, what happened? They tried to sell it off, or they tried to continue this trend. As you can see right here, the first March candle, or the March candle, it tried to push down. But what happened? Buyers stepped into the market and probably decided that this is the lowest we can go on Nasdaq. It was around 11,759. Maybe they decided this is the lowest we can go. Then they pushed price back up. Price went all the way to 13,000. It broke this previous lower high right here, and also broke this previous lower high. If we look at the bodies, let's look at the bodies. It broke the bodies of this previous lower high. It broke these equal bodies of these previous lower highs right there. Same thing over here. By bodies, I mean the candlestick bodies over here in these lower highs. 1st August and the 1st July, the August and the July candles. You can see the bodies are relatively equal right there. It broke that region, right? This is a sign of a trend change. This is a trend changing or a trend reversing. When a downward trend, when something like this happens, it's a signal that it's time for the market to change trends and start moving upwards, right? Once that happened, What happened the next month? They tried to push price down, but they were retracing previous lower highs. They were retesting previous lower highs. Breakout, retest, continuation. This is what actually happened right there. Breakout, retest, continuation. Those are basic trading principles, guys. Basic principles. I'm sure you can learn those things on babypeeps.com, right? It was like this, right? It broke the previous lower high. Actually, it even broke the second one, right? Let's expand it. It broke even the second one slightly like this, right? It broke these two previous lower highs, and then the next thing that it did a retest of the previous lower high like this. It retested, breakout, retest, and then continuation, starting of a new trend, right? This was the start of a new trend, from creating lower highs to creating higher highs or higher lows, right? It continued going, creating higher lows over here, created a higher low there. It created a higher low right there as well, right? So basically we knew that we're in a new trend immediately after this trend changed right here. We knew we're in an upward trend, right? So what happened? Price retraced for 3 months, 3 consecutive months, right? This is also a pattern. I forgot the name, right? For 3 consecutive months it was retracing. Then what happened? What was the next thing that happened? Forget about the patterns or whatever it is. I'm just trying to illustrate that it was retracing for 3 months, right? Then this massive momentum candle showed up. If you watch the advanced candlesticks video, I speak about these types of candles, right? Or also these candles with these huge wicks, or these ones with these huge tails or these huge wicks right here, right? I speak up these types of candles where it pushed down, pushed up, and these momentum candles, I speak about those candles. So after seeing something like this pattern right here, where this momentum candle or this bullish engulfing candle is telling us that we have a higher probability in the coming month or coming months to expand to the upside, right? It's telling us that we have a higher probability of expanding to the upside. What's the nearest high or the nearest resistance that we can look out for? The nearest one is this psychological level, this investor psychological level, and we place this level on the daily time frame. I think it's this 16,500 level. It seems like it's a huge level. It's a monthly time frame level, because if you look at here, for 3 months it was rejecting, right? So it's a huge key level, right? So we already have a bias on the monthly time frame. We are strongly pointing to the upside, which means we are strongly mostly should be looking for buys in a longer term perspective at the moment, right? In a longer term perspective, we are gonna catch sales against the trend as well, but it is what it is. If you look at the weekly time frame, the candle from the week before, the candle from the previous week, it's also telling us that there's buyer strength as well. What do I mean by that? This is what I actually mean. Price was pushing upwards. It started to become choppy because it was failing to break this other psychological key level, the 16,000 level, right? It shot up, it was rejected. It shot up, it was rejected. It tried to go down, it kept on moving sideways right there, right? Basically, it's telling us there is a sensitive zone right there, which was the 16,000 level. But what actually happened in this previous week, or the third candle that followed, what actually happened in this previous week that just passed, price tried to drop, but after reaching this previous resistance, or this previous key level right here, buyers stepped into the market. This is the Judas swing. There was a Judas swing right there. That was manipulation. There was something that happened there. They stopped out a lot of people, and then they pushed price back upwards. I moved this thing by mistake. So they stopped out a lot of people right here. They took out a lot of sell stops. They took out a lot of sell stops right there. A lot of sell stops, or even sell executions from there, they were taken out when it was pushed upwards right there, right? So this was telling us that we're in a bullish trend, or we are still strongly facing to the upside. And based on the monthly as well, it's telling us we are still strongly facing the upside. The weekly is saying we are still facing the upside. Two major time frames have already aligned. We can even skip the daily time frame if we wanted, But knowing me, if I wanted, I still step down to the daily time frame. That's when we got this trade from yesterday, when we saw this daily time frame candle closing above this previous strong area of resistance, rejection. But they tried to push it down from this level, but it came back up and it breached that level. So that was a strong buy. That was a 1:4 trade, in and out, right? But I'll show you where the entry was, right? The next step, right now we are still in a bullish trend, but the only reason I see myself buying, the trade went up here right now. Right now it's still 8 a.m. The trades will start showing up either 1 hour before the New York session, or during the New York session, or midway in the New York session. That's when most trades will most likely happen, right? We can either anticipate a small drop, as if we just get a small drop, then we might get opportunities or cheaper opportunities to buy at a discount, and then price might rally upwards to this ceiling right here, this 16,500 level, this side, this zone of liquidity, basically. So basically, based on 3 time frames, we are pointing to this key level. This key level is the strongest magnet that we have on the chart. This is a magnet, but this is the strongest magnet that we have. Basically, key levels act as magnets, because price moves from floor to floor, or from ceiling to ceiling, right? So when we step down on the 5-minute time frame, this is a demonstration of top-down analysis, guys. When you step down on the 5-minute time frame, 3-minute time frame, 1-minute time frame, 2-minute time frame, that's when the entry strategy starts coming in. That's when we look for those fair value gaps, those imbalances, those manipulation candles, those spikes, right? Spikes at support levels, where price will drop and reject from those levels. We buy from there, right? Price drops and creates a fair value gap, things like that, right? So you should be anticipating for those kinds of movements. This is a demonstration of what top-down analysis looks like, but the whole core behind top-down analysis is using the higher time frames for bias or direction, and the lower time frames for entries. And the most important thing is knowing how to read candlesticks.